Jeff, look, obviously you're a huge supporter of the company. You've been on the board for 9 years, but $100 billion valuation. What's your reaction to that? Did that surprise even you?
You know, it did surprise me a bit, given where we priced it. We suggest it was a little bit of our expectations. That said, it's a really special company that has, it's a category leader in a global market.
So you've taken companies public before. Do you think there was a misalignment or a mispricing here? Because that's a lot of money left on the table.
It's a lot of money left on the table. The markets have been pretty exuberant in recent days. The DoorDash offer yesterday was equally exuberant. We expected some level of exuberance. This level surprises.
Now, Brian seemed genuinely surprised when I shared with him live on air that the price had doubled. You've been at this with him for a really long time. I know you know all the war stories. How significant is it that they were able to take this company public in the middle of a pandemic after travel had been halted?
I mean, I was chatting with them earlier today. The U-turns in the business. Entering the year, we were super optimistic. We were planning for the IPO. The business was on fire. The pandemic hits, the business stops like a screeching halt. I think it dropped over 80% in just a few weeks. And then to emerge, 8-9 months later with this kind of opportunity, it has been quite a ride. Who would have thought you could take a global travel business public during a pandemic?
So what is your outlook on whether they can live up to that and how they live up to that? I mean, there's a lot of investor optimism, but a long road ahead.
Yeah, I mean, it's the same with any company. You have to perform when you're public, and they have a unique industry-leading position, and it is one of the largest markets on the planet, and the planet is their market. So they have the opportunity in front of it. Now they have to show, as I was telling Brian earlier today, you just went from the minors to the majors. You got to show them what you got.
Now you've got a lot of experience with two-sided marketplaces, OpenTable, eBay. What is your advice to him going forward, given the uncertainty ahead? We still don't have a vaccine yet. They had expanded into a lot of areas that they then pulled back from to get through this. What is the next iteration of the company as a public company?
The thing that's been so interesting is watching how adaptable the model has been. No one is traveling internationally now in any shape or form. That was the company's core business in February or January and February. So to have the model be that adaptable, to be able to, just kind of, go from global travel to local travel, and not miss a beat, it is, I think what we've all learned during this is double down on what makes the business special. And that is, their core host and guest proposition.
Now, more broadly, when you look at the macro environment, tech has seemed so divorced and decoupled from what's happening in the real world. The stocks keep going up, valuations keep going up. You lived through 1999. Are you concerned about the frothiness? Are these valuations too high?
I don't have a real point of view on that, because we're early stage private market investors. So what the public market's doing is we monitor, but I don't have any expertise in it. I don't know if it's overvalued or not. There are a set of companies that are emerging now, particularly kind of 6-8 years after the iPhone, that the smartphone came, that are just really special companies. And so it's interesting to see that they're being well received by the public market.
Valuations are high in the private markets as well, though. And I spoke to another source in the venture capital world who said they're telling their entrepreneurs, if you can raise money now, raise money now. What are you telling entrepreneurs in terms of whether, the environment could change at any moment, or whether the good times will keep on rolling?
I mean, the one thing that I've learned in Silicon Valley is the environment could change at any moment. And so the capital markets are open, capital markets are closed, capital markets are this or that. So I think you try to control what you can control, and then brace yourself for uncertainty, because that is the one constant, is uncertainty.
Sequoia, one of your competing venture capital firms, gave a dire warning earlier in the pandemic, warning companies to cut costs, be lean, that this was the black swan of 2020. And then, tech has had such an incredible year. Your colleague Scott Cooper recently tweeted about that warning from Sequoia earlier this week, saying winning investment strategy when a prominent venture firm, particularly one named after a tree, publicly pronounces that the world is coming to an end, go long. Do you think Sequoia got it wrong?
Well, given Alfred Lin had DoorDash yesterday and Airbnb today, I mean, they're an excellent firm. I think they were right to raise a cautionary flag when the pandemic came. I thought it would be a net negative to a lot of the companies I work with, and interesting enough, the consumer's adaptable, the business models are often adaptable, and companies emerge stronger.
So where are you placing your bets for 2021? What sectors are you most excited about? What's going to be the hot sector?
I'm a bit of a one-trick pony, marketplaces and network effect type businesses. So, if you look at, you cited eBay, OpenTable, Airbnb, Pinterest, Instacart, I love the marketplace business, the two-sided or three-sided in Instacart cases business and model, and we'll continue to place bets there. There's one coming soon.